Okay, so welcome once again. We are going to proceed the market structure, and here we are moving to bearish market structure. Okay, so as we saw in the introduction or in the first video, I told you that this is how bearish market structure moves. Okay, so we have the expansion, we have the retracement, expansion, retracement, expansion, retracement, expansion, retracement, and then expansion. Okay, so this is how bearish market moves. Okay, so I told you in bearish market we are forming higher highs and higher lows. But in bullish market we are forming higher highs and then higher lows. But in bearish market we form lower lows and then lower highs. Okay, so here we form lower high. This is a lower high. Okay, so another lower high, another lower high, another lower high, and here we are forming lower lows. This lower low. Okay, so lower low, we have a lower low here. Okay, another lower low, another lower low. We get them. Good. So this is they are called the top ones are called lower high because you can see that this low, this high, this high, this high is lower than this high. This high is lower than this high, and then this high is lower than this high. Okay, when you come down here, consider this low is lower than this low, and this low is lower than this low, and this low is lower than this low. You get it? So that's why we label them as such. Now you can see that we have the retracement here, the expansion, the retracement here, the expansion, the retracement here, the expansion, the retracement, and then the expansion. So in bullish market structure, we were looking for buys. Okay, we were looking for buys. So in bearish market structure, we'll be looking for sell opportunities. Okay, so these are the areas we'll be looking for sales. These are the areas we'll be looking for sales. Here, here, here. Okay, these are the areas we'll be looking for sales, or these are the POIs, point of interest, POI. So I told you it is a 4. And let me tell you this, I do 80% of my analysis in 4-hour time frame. I do it because it is the intermediate, or let me put it in this way, it is the time frame I get most of my profit there. Okay, so I do 80% of my analysis in the 4-hour time frame. So let's go here. Good, so we have the POIs. Now, so this is how bearish market structure moves. Okay, so let me delete this. Let me maintain the lower high. So if you remember, I said in bullish market structure, you can say the market is bearish. I said we can say the market is bearish only if the last lower high is broken. Okay, now let's go to bearish market. In bearish market too, we can say that the structure has changed from bearish to bullish only if the last lower high is broken. So this becomes the last lower high here. Okay, this place becomes the last lower high. Okay, so let's do the labeling and then everything becomes simple. I hope you remember that. I hope you guys remember the short labels I did. You see, in bullish market structure like this, we have our BOS, break of structures, at the top. Okay, breakup structures at the top. But in bearish market structure, the breakup structures are at the bottom. You see, so this is a BOS, 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 BOS. Okay, but in bullish they are at the top. BOS. Okay, good. So let's label them. So we have our BOS here. Our BOS. Then we have our BOS, our BOS, our BOS. If you want to know how I copy it simple like that, you place your right bottom of your mouse and you add control, then you drag it to where you want to drop. Okay, so I touch it and press control press the right button and then I drag it. Instead of me to be typing them, I just use that shortcut and then go my way. So this becomes the most important area. Okay, this zone becomes the most important zone. Why? Because if we break this zone, meaning we are changing from bearish to bullish. Okay, we are changing from bearish to bullish. Good. So this place or this area, let me give it different color so that it will be um let me give it white. Okay, so let me give the background to red. Okay, so if we break this area, it means we are um we are going to bullish. We are changing from bearish to bullish. Okay, and these areas are also called supply. I didn't talk about this in the previous video, so let me talk about this. These areas are called supply zones, supply zone, supply zones. Okay, so we sell at supply zones. That is the POIs. Okay, so in terms of bullish, we have demand zones. We have demand zones. So these areas, the POI areas, become the demand zone. So this place is a demand zone. This place is a demand zone. Thank you. So let's move on to the bearish. So I said we can say that the bearishness is done, or the bearishness is over. Only if we break this higher high. Okay. Only if we break it higher high. So let's say we have something like this. We break it. Okay. They will count for retracement and then continue. So here we will change from pure from supply zones to demand zones. Okay, so top here, supply zone, supply zone, supply zone. Since we break this structure, you can see that uh, we have a break of structure or BMS. Let me add this so that you guys will understand it. It's called BMS, break of market structure. So this area becomes our BMS. Whenever BMS occurs, it means that the structure is changed. But whenever BOS are occurring, it means that we are just continuing the structure. You get it? Okay, so here we had a BMS, that is break of market structure, and then we start to be looking to buy at a demand zone. But until this structure is broken or this last lower high is broken, you cannot say that the structure is over or the bearishness is over. You get it? Okay, good. So let me teach you something here. Here too, here too. If we don't have, normally when we are about to have a BMS, we have an SMS first. Mostly we have SMS, that is shift in market structure. Instead of it to form, instead of the market to form another, oh sorry, instead of the market to form another lower low, it fails to form another lower low, then go to break this structure. Okay, then goes to break this structure. So we have the shift in market structure or shift in structure here, which is labeled as SMS. Which is labeled as SMS. Which is labeled as SMS, and then okay, we change the structure. So this is how bearish market structure moves. And then quickly let's go to the chart and then see the real scenario of the issue here. So this is US 30. Okay, US 30 is top 30 stocks, okay, of the United States. So stocks like Apple stock, Amazon stocks, Netflix stocks, the top 30, they are put together to call the US 30. Okay, so whenever the stocks are doing well, US 30 tends to go high or tends to be bullish, and whenever the stocks are descending or they are not doing well, mean when the US economy is going down, US 30 tends to also go down. So here, let's start from this area. You can see clear bearish here to here. Okay, so we can see that if you draw the market structure, you can see that we have expansion here. Okay, a small retracement, expansion, then retracement, another expansion, retracement, and then expansion, retracement, and then expansion. Yes, you get it. So this is it. This is it. Good. So we can see that this is the last lower low. This, no, let me come here so that everything will be good. Okay, so you can see that this was the last lower low. Sorry, lower high. It was the last lower high. So we can start labeling them. You can start labeling them here. You can see we have a lower high. Lower high. So I press my control price drag, and then go here, lower high, lower high. We have a lower high here. So obviously there is no doubt we are forming lower highs. We are forming lower highs. Good. So we have a lower low here, lower lows, lower low, a lower low is here, another lower low is here. Let me draw it correctly. Another lower low is here. Okay, so I told you that, remember I told you that unless we break this, okay, let me draw it here. Let me draw it in here so that we can always refer to it. Okay, okay. This is the last lower low. So remember I told you, unless we break this, okay, we break this one to cause a BMS. We will have SMS here. SMS here. So unless we break this one, unless we break this zone, this zone, this zone, this zone, this area, unless we break that area, we cannot say that the market is bullish or has changed structure. So this area is the same as this area. Okay, this area is the same as this area. So until the market breaks this, we cannot say that we've changed to bearish or bullishness. You get it? Okay, now we will come back to this, but let me okay, let's do this first. Okay, so let's see if the market can break this structure, because here will be our POI, here will be our point of interest, and it's also a supply zone. Let me write it. This is a 4 POI, point of interest. Okay, so it's also a supply zone. So you will be looking for a sell here. You will be looking to sell the US 30 here. As I said in the previous video, I said that we don't necessarily or instantly sell when the price gets there. We wait for reactions or confirmations, and I will talk about them later before we sell, because we don't know either the market is going to break and change to bullish, or it just to test it. This is what I'm talking about. We don't know if the market is going to break, okay, break it and continue and change to bullishness, or it's just going to, retest here or mitigate here and then continue the bearishness. So we just wait for reaction or wait for confirmation, and then um, we continue. You get it? Okay, and then we continue. Good. So let's play the market and then see how the market went. Wow. You all can see. I'll explain everything to you. So let's see how the market goes. Oh, nice, nice, nice. Better. Good. So here you can see that the market broke it. Instead of it to to retest it, do something like this, and then come down. It didn't. Broke it. You see, these candles are above this lower height. So from here, you should anticipate buys. Okay, you should be looking for buy entries, not sells again. Cool. So this is bearish market structure. Now I wanted to tell you something. So let's say, you came into the market. Let me remove all the drawings. You came into the market, and then let's go here. You came into the market, and you saw this market structure. Okay, market will forming expansion here, retracement, another expansion, small retracement, expansion, retracement, expansion. So you see that there is a retracement. Okay, remember I told you this. I told you that in bearish market, these are the areas we look for sales. Okay, this area, and then we'll be waiting for here. Okay, you'll be waiting for this area to sell. You get it? So we'll be waiting for this area then to sell again. That is why I told you. That's what I told you. Nice. So here we'll be waiting for this area to sell. This area is our point of interest. Okay, so we can sell from here and then target the previous lower lows. Sell from here, then target the previous lower low. When we get to the order block, you understand everything and everything will become simple. Okay, we know the exact area, although this whole area is a point of interest, but within that point of interest, we have a certain zone, what we call the order block, and then we sell from there. Okay, so your stop loss, you take profit, should be, you can target the previous lower low, and then your stop loss will be a buy here. Okay, so let's play the market and see something. Wow. So you can see that the market didn't quite touch it. Okay, so one rule is you don't force a trade, you wait for the trade to come, but you never force a trade. But let's see this. Let's see something here. You can see that here you have gotten a nice entry here. I've got a nice entry here. So here, forming. So we have expansion, retracement, expansion, retracement, expansion. We have retracement, and then we are expecting expansion. Okay, so our POI will be somewhere here because we find the order block somewhere here. Okay, find the order block somewhere here. So you just place your trade here. This one. Okay, so place your trade here. Place your trade here, and then you wait for the price to touch your POI. Boom. You can see that price came, and then we have our take profit. So in bearish market we don't buy, and in bullish market we don't sell. But I've told you that maybe you see your bullish market structure in daily or weekly time frame. When you go to 4-hour time frame, you can see bearish. Okay, because what is happening in the higher time frame firstly happens in the lower time frame before the higher time frame confirms it. Okay, so let's say the market is bearish and we are about to change to bullishness. Okay, the bullishness will first start in the lower time frame before the higher time frame confirms it. You get it? So let's say you are doing your analysis in the 4-hour time frame like we are doing right now, and the market is about to change to bullish. It will start from either 15 minutes. It will first start from the 1 minute, go to the 5 minutes, 15 minutes, 30 minutes, sometimes 1 hour before the 4 hour confirm that we are in bullish. So everything that is happening in the higher time frame first starts from the lower time frame before having a confirmation in the higher time frame. So this is bearish market structure. Nice one. Nice one. Now I want to talk about one thing. I want to talk about one thing. Okay. You see these things you are seeing here, I think you know they are called candlesticks. These are candlesticks. Okay, so let me draw candlestick. Candlestick. Okay, so let me make nice. I want to teach you something, so please pay attention. I want to teach you something. Okay, so nice. So this is a candlestick, and okay, so this is a candlestick. I hope most of you know this already, but I want to use it to do something. This is called wick. This is a wick. The tiny lines is wick. This is what we call the body of the candle. Good. So another wick is here. We have another wick over here. Good. So in terms of bearish market like this, in terms of bearish markets, in terms of sorry, so in terms of bearish market like this, remember I told you we can say the market is bearish. The market is has changed from bearish to bullish only if the last lower high is broken, which is this one. But do you know something? The body of the candle must close above it, not the wick. You get it? So let's say you see a wick closed above the lower high. That is not a BMS, it's a fake breakout. Okay, it is not a real BM. The full or the body, and I don't mean the full or the whole body. Part of the body, at least part of the body should be close above it. Okay, part of the body should be close above it. You get it? Mm-hmm. So you should have something like this, and then the bullishness can proceed. If you, let's say, if you have something like this, the body closes above it. The body closes above it like this. Good. It's a BMS. Okay, the body closes like this. It's a BMS. Nice. But let's say it's only the wick that closes above it like this. No, this is not a BMS. We need the full body. Okay, we need the full body to close above it. You get it? Nice one. Nice one. I hope you guys understand. Nice one. So let's go to the chart and see practical. This is a wick. This is the wick of the candle. This is a wick. These are wicks. Okay, these are all wicks. So when we talk about BMS, the body, the body which is this one. Okay, the body which is this. Let me show you. The body is from here to here. Okay, for this candle, the body is here. This small, this one, the body is here. This one, the body is from here to here, and then the wick. You get it? So the wick, the body must close above the high before you can say it is a BOS or a BMS. These things also works in BMS. So we can, when we are having a bearish market structure like this, okay, come here. When we are having a bearish market structure like this, I told you this BOS, BOS. The same thing, the rules applies to the BOS too. Okay, the rules applies to the BOS too. You cannot have a wick breakout and tell me there is a BOS. No, the body, the full body of the candle should close below, should close below. Okay, so take it in mind as you are marking your BOS and BMS. We are not talking about the wicks. We are focusing on the body. The body must close above or close below before we can call a structure a BOS or a BMS. Nice one. Nice one. I think we've touched. I want to make everything simple to you. I want to make everything simple for you guys. I don't want to make things complex because if you understand this thing, you are going to make a whole lot of money in this market. Okay, you guys are going to make a whole lot of money in this market. Good. So that is bearish market for you. That is bearish market for you. Okay, so I think I had something here I wanted to show you guys. So let's go back to Euro CHF and see. I think I have something here I wanted to show you guys. Okay, good. So I'll talk about it later. I think so. I'm looking for a best consolidation, and then we talk about that one. Nice one. I think that's a consolidation here. Good. So let's talk about the last part of market structure, which is consolidation or ranging market, which is called consolidation or ranging market. So as bullish moves like this, and bearish moves like this, bullish moves like this, and then bearish moves like this. So, oh, sorry. Ranging moves like this. I think I drew this in there. Okay, this is how ranging move. That is consolidation. Now, if you take your trade in, let me say, I mean, you do your analysis in 4 hour time frame. You see that the market is ranging. Stay away from the market. I repeat, if you see that the market is consolidating, please stay away from the market. Wait for the breakout and see where we are going. Okay, because you can see that here will be a bullish. We can break here and be bullish. We can break here and be bearish. So the market is not giving you clear direction. So you won't know what to do. You can sell, and when you sell, they will buy. You can buy, and when you buy, they will sell. So it's better to stay away from the market. You get it. But let me give you this tip. When you see a consolidation in the higher time frame, you can go to the lower time frame and find a nice market structure and trade the structure. You get it? Let's say there is a consolidation in 4 hour time frame. No, sorry, one weekly time frame, and then 4 hour time daily time frame. You see, as a swing trader, you take your trade in 4 hour time frame and then 1 hour time frame. Okay, so when you see that there is a consolidation in the 4 and the 1 hour, stay away. You get it? Good. But when you see that there is a consolidation in the weekly or the daily or monthly time frame, then you can go to your preferred time frame, which is the 4 hour or the 1 hour, and then look for the structure and then trade alongside the structure. You get it? The same thing, if you are a day trader or if you're a scalper, you take your trade in the 5 minutes or the 50 minutes time frame. You get it? So when you see that there is a consolidation in the time frame that you take your trade, let me say the 5 minutes or the 50 minutes, stay away from the market. But as a day trader or as a scalper, when you see that there is a consolidation in the 4 hour time frame, you can go on and find nice market structure in the 50 minutes or 1 hour time, or the 5 minutes time frame, and then trade. Okay, so know how to deal with the consolidation market and know how to deal with the bearish and then the bullish market. So thank you. I think you will understand this thing. As I said, trying to make everything simple for you, and then you grab it and make money out of it. So this is market structure. I want to summarize everything up. In bullish market structure, we buy. In bearish market structure, we sell. In consolidation market structure, we wait. We don't do anything. We wait for a breakout, and then we see where the market is going. Thank you once again, and then I'll see you in the next video with a different chapter. Thank you very much.